I'm just setting up quickly. I've been bombing and sending messages out to make sure everybody that needs to be on this call, they are on this call. No excuses, okay? Because some people's risk journey is going to change tonight, but just that a lot of people don't know that their life is about, their trading journey is about to change, from perspective, from the introduction, an induction of knowledge, everything changes. And when things begin to change, visions begin to change. What you see will begin to change when the experiences you get exposed to are different. So perspective. I know the numbers are not encouraging, but we could actually make it encouraging, so I'm going to give us, so we have 60 seconds to go anywhere right now. If you have to get all your groups, let anybody know right now that we are on a very, very powerful trading, experience topic. Let them be live right now. So that's less than 40 seconds to go. Okay, so we have 40 seconds to go. Okay, so yeah, I want to put the bomber. Why is my screen? Okay. Are you guys excited? What's your expectation? Everyone on the call right now, drop on your on the chat. Let's make the chat a little bit lively. I think that you guys are eating too much rice. You're feeling bored. Okay, you're feeling lazy. Come on, let's wake up right now. Get on the chat and tell me what your expectations are right now. Okay, let's just get on it. Tell me what you expect. It's a powerful call. I promise you. I told you guys that we're gonna do a second one. I'm gonna get you guys in, and you guys are in. How many of you are excited and grateful? Okay, just 1 minute. So let's get the chat. Let's get a chat. What's your expectation? I want to know what your expectations are. Okay. What you expect? We had one last week Monday. I'm gonna give you guys, before we get on this call, I'm gonna give you guys a teaser, a test to know what you're saying or what you're gonna tell me on the chat right now. You mean it, okay? So we had an amazing call yesterday on Monday, and a couple of days has gone by. So let me know how much you retain knowledge, how much you were intentional. Okay. What was your take home on Monday? What was your biggest point on Monday? So let me not even task you too much. Okay. And what did you do about it on Monday? Put it on the chat. Because at the end of the day, let me be very, very honest with you. Okay. A lot of people think there is lack of opportunity. A lot of people think they need something, they don't have what they need. But the truth is, every day, opportunity beckons on you, calls on you, knocks on your door. The question is, every exposure to knowledge is a seed. What did you do with the seed? Because if you hold the seed, it's useless. If you don't plant the seed, it's useless. It is what you do with the seed that would eventually have an opportunity to germinate or bring forth fruit. Okay, I believe everybody can hear me. Am I alone? Can you guys hear me okay? Put 10 if you can hear me okay. Let me know my sound and my network is good. 10. Okay, that was fast. It means you're hearing me. Okay. So if you're hearing me and you understood my my request, for those of you that I know not many of you that are here right now were here on Monday. So I'm gonna gift you guys the recording on Monday. I think it's actually live, but one of the things I'm gonna say before the score ends, okay, I'm going to type it. I'll put it on the side. Don't miss. If you put these two things together about risk, so we are all about risk. Okay, there were four major, things that was dealt with on Monday that exposes what many people don't know about risk management, and it was mind-blowing. So, and today we're going to go deep into one that you use every day. This is, there are different types of knowledge. There are information that will come to you that just, oh, wow, this is beautiful. Okay, I think I like it. It makes you know something that you don't know. But there are information that digs you. It makes you know something, all right, that deals with you every day. So you are more closer to the one that deals with you every day. There's no trade you're going to take. So if you've been a trader and you've not been recording success, when I say success is the progressive realization of what the idea is. So you may have $100 account, $1,000 account, and your goal every week or every month is at least, let me make 5 or 10% of my equity. Okay, and you have not been realizing that, it means you have not yet been successful. There are a couple of things that are responsible for your goal not being achieved. One of them is what we're going to be talking about tonight. The execution on risk is very, very key. So I dropped, so let me pin this. So for those of you that are on Instagram, I am not, how do you guys say it? I am not the celebrant. Okay, I'm just the one ushering the celebrant right now. Okay, so I'm not going to be here on Instagram. I'm just here to notify you guys that we are live and don't miss out. Okay, I know some of you are already in, so I just pinned this right now. So just a quick one. We got 2 minutes to go on this task. Every one of you, if you're already on this call and you were on Monday's call, you were on Monday. Okay, what about was shared? If that English is right, forget every English. It just makes sense. Let it make sense to you. What was shared on Monday that made sense to you, that you took home? Let me know you guys still remember Monday. Because if you don't remember Monday, chances are what you're going to get today, it will not even last a week. It's gone. Everyone on the chat, you were here on Monday. Drop what it is you learned on Monday. Okay. Madam Tachana said you learned taking notes. I didn't reckon Mr. Chijoke teaching you how to take notes. All right, go ahead. On Monday, I learned that I shouldn't trade without ensuring I check off everything on the checklist. Okay, so you remember the checklist. Wait. Oh, we didn't do something. We didn't share. We promised to share the slide with them. We didn't share with them. We'll share. Okay, don't guys. We'll share the slide with you. All right. So you don't have to tax your brain too much. So when you watch the recording and you have the slide, it's gonna make a whole lot of sense. I'm not. My chat is empty. You guys are eating rice. What's happening? Okay. What's happening, guys? You guys don't want us to start on time. No. The truth is this: if you're not giving me something worthy of, I did something on Monday with you guys, then why should we do this call? I have so many things I want to talk about. I'll just tell my guest speaker, please, sorry. I didn't know my students are eating rice today. Let me just leave them to continue eating rice and celebrate all of the mothers. Today's Mothers Edition. Let's not get involved with the Mothers Edition. Let even the men keep being mothers, or the men celebrating the mothers. We don't have to get it. I could do that, right? I could literally do that. No, not literally. I could actively do that. Okay. So tell me on the chat right now. I know the names I'm seeing right now. At least more than 20% of this call were on Monday. Except, this is what I want to get. It's either you have slept with it, forgotten about it, then I know, okay? I know what to tell you about today, because at the end of the day, it's not going to be different. Okay, good. You guys are dropping it right now. Drop something. Participation is key. Okay? Participation is key. What you learned on Monday. Position sizing is important. I must not over leverage. Okay. We learn about risk management. You just took it from me. What about risk management did you learn? Okay. I must trade with stop loss. Yeah. So you guys are just dropping because Cambridge says it's not going to allow Mr. Okay, go on. So you're just dropping. It's okay. At the end of the day, it's okay. You're dropping something. Strategy, size, portfolio, disaster. That's what I'm talking about. Okay. Define your edge and follow it judiciously as a trader to achieve consistent success. Beautiful. This is what we call detail. Disaster. Whatever we go wrong, we go wrong. If you're not prepared, broker issue. That's good. I love that. That makes sense to you. Size risk, Madam Juliet. Well done. Okay, size risk. Size risk. Okay, I learned that it is very important to look at your size, your risk, not to overtrade, not to over leverage, and not to trade without stop loss. Basic. The possible disaster struck. Okay, disaster meant a lot to you. Okay, I have to test the strategy myself. As long as good testing it yourself, that makes sense. 4 types of risk, that makes sense. What I learned from the call was to be able to stay. So you know what's happening right now. Even if you're here, you've slept and forgotten. You can see that even me just doing this exercise, okay, is revamping some of the knowledge that went into the sleeper cell. Okay, and all I would just say before I bring my friend, my brother, our guest speaker here right now, all I would say is this: every information is a seed, and all you need is a seed. And if you're not at the stages you get harvest, all you need are not fruits. You need seeds that will become fruits. So take every seed. Every seed is useless if it's in your hand, if it's in your brain, if it is not useful. If it is not put to ground, it is not used. You sow every seed. How do you sow seeds of information? You make do practically what those information were all about. You use them, you put them to practice. That is how you sow your seeds, and you get results. And when you begin to look at those results, you grow on them. That is how you grow your seed and you grow your planting. Whenever information comes to you, don't enjoy information, challenge information. Okay, I need everybody to put on the chat, I will grow to challenging information. Many of you don't challenge information, you enjoy it. Okay, if you're not making money the way you ought to make money in forex, you have no business enjoying information. Every information should scare you, should put you out of comfort. Every information you get from a mentor or coach should trigger a response ability. I want to do something with this. It should discomfort you. If you're enjoying it, then you really don't know what to do with that information. With that being said, are you guys ready? Put I'm ready on the chat. Put I'm ready. Okay, put I'm ready. So this information you're going to get is not going to be useless because you're going to challenge this information. And I also have a special request I'm going to make for some serious people at the end of this call. I'm going to make a special request. And I had it in my mind, not discuss, but I'll make it live. And but I want to know how serious you are. You're going to challenge this information. So I'm telling you, okay, at the end of maybe a week or two, I will start seeing testimonies that will come in as a result of this information that you're going to hear, and you're going to challenge this information. Okay, and yeah, it's going to be brief, probably brief, but it's based on how you guys respond. It's Sunday, and we're so grateful to be here. With this point, with this few minutes spent so far, I want to humbly bring our guest speaker, Mr. Chijoke. I don't have to introduce him anymore. Okay, the information that he is going to share, okay, would literally tell you who you are going to be exposed to. The level of information will tell you how exposed, how detailed, how old. There are some things that comes with time. Okay, you go when you go through this environment and you spend time in the industry, you see cycle, and you understand technology. There are certain things that would happen to you as a risk trader. When people are just trying to make money, you're trying to preserve money. This is someone that I know that is very reserved in capital preservation. Please, put some fire emojis, every of your love emojis on the chat as I bring, our brother, Mr. Chijoke Ukegbu. Are you ready for us, sir?
Yes, indeed I am. Good evening, everyone. Can you hear me okay?
Amazing. Yeah.
Okay, thank you. Thank you again for that intro. Oops. Let me show you speaking. Is it just me or I can't hear? Oh, okay. Can you hear me? Okay. Let me just be sure that everything is fine.
The sound is a little bit low, a little bit.
Oh,
Yes,
okay. Is it better now?
yeah, it's better now. Yeah.
Okay, awesome, awesome, awesome. Thank you again for that intro. Really, really grateful for again the opportunity to be here. Um, everyone is out here. Thank you for taking the time to be here today for us to continue this conversation that we started on Monday. So Monday, yes, I've seen all your comments in the chat. We're talking about risk management. Today we are moving on to something else that is a part of risk management, and this is position sizing. Now, I am making a claim on this slide. Well, let me test. Can everyone see the slide that I'm sharing? See my screen? Hello, can everyone see my screen? Wow, keep saying low volume. Okay, please just let me know in the chat if the volume is okay. If you can hear me loud and clear, if you can put a 7 on the chat, if the volume is fine. Awesome, awesome. Okay, I just wanted to be sure that I'm communicating. Okay, so you can see and you can hear. Today we're going to talk about position sizing. It's a component of risk management. It's a unique component of risk management. This has to do with how much you decide to place as your lot size when you're trading. Okay, that's really what position sizing is about. But there are layers to this topic, and hopefully as we go through the conversation, you will be exposed to those layers. Now, I've made a claim on this slide that position sizing is how you hit or miss your objectives, your trading objectives. And so the whole purpose of the conversation this evening is for me to prove that claim, that position sizing is the way that you achieve your objectives as a trader. So with that said, of course, you know how we start this conversation. We will always start with a quiz. And today's quiz is, how much do you usually risk per trade? Okay, quick quiz. Let me see comments in the chat. So this will be like a percentage of your account. Yeah, you can be honest, right? How much do you usually risk per trade? Not how much are you supposed to risk. How much do you usually risk per trade? Okay, I'm seeing some very interesting answers here. 10%. Yeah, we definitely need a conversation after this meeting. Okay, 1.5% per trade, 0.5%. Okay, it's interesting. I'm not seeing any weird numbers like 0.3, 0.7. Okay, 0.5. Interesting. Okay. We will, I know 1% seems to be the most common answer, right? And when I first started trading, I also, I heard everywhere, do not risk more than 1% of your account. Right. I heard it so many times that I didn't even realize I had internalized that as a belief. So one of the other things that we're going to do today is we're going to examine that belief to see whether that belief is useful or not, or why that belief even exists in the first place. Well, thank you very much for the answers that you've provided, okay, about how much you risk per trade. We need to start with some foundations as we start this conversation. There are 4 things that you need to know about position sizing. Okay. Some of these things may be surprising to you, but it's important for us to start with this foundation and then we can build from there. The first thing is the lot size that you use when you're taking your trades, right? It really is based on your position sizing strategy. So what that means is when you have your trading strategy, your rules for getting in and out of the market, okay, the next thing to decide is how much am I going to risk? that decision on how much you're going to risk is based on your position sizing strategy. The implication of that is that your position sizing strategy is completely different from your trading strategy. They are not the same. I'll take that again. Your position sizing strategy is separate, different from your trading strategy. Okay. Your trading strategy is the set of rules you need or you use to get into the market or you get out of the market. Where will I place my stop loss? When will I get into the trade? Where will I take profit? If I'm using a trailing stop, where will I move it? When will I move it? That's your trading strategy. But how much you risk per trade is your position sizing strategy. So if you didn't know before, position sizing is a separate strategy from your trading strategy. Very, very important for us to establish that point. The third thing is there's no amount of being conservative on your position size that will save you if your trading strategy does not have an edge. Okay? And today I'm going to show you a way to check if your trading strategy has an edge or not. Okay? But just recognize that position sizing will not save you if your trading strategy doesn't have an edge. So if you like, risk 1% of your account. If your strategy doesn't have an edge, you are eventually going to lose money, right? Because your strategy has no edge. Okay? Again, the implication of that is the edge or the advantage of your strategy has nothing to do with your position size. It's not because you risked 1% or 2% or 0.5% that you were profitable. No, you're profitable because your strategy has an edge. Okay? However, the last point now, it is with position sizing that you achieve your financial objectives. Okay? Now, some of these things may not be clear, but just keep these. If you can take a screenshot of these 4 points, because these points will be the foundation of the conversation that we are going to have today. And don't worry, if we go through the theory part, right, by the time we get to the case study, I guarantee you that all of these points will make sense. Okay. All right. So let's move on. There's a point we made right at the end of this slide saying position sizing is how you achieve your financial objectives. So let's spend a minute talking about objectives, because I have seen from experience that the subject of objectives is not clear to everybody who trades, right? Okay. So let's talk about objectives. There are two types of objectives when we are trading, right? There are non-financial objectives and there are financial objectives. Okay? And both of them are important. So I've given examples of what non-financial objectives are. Non-financial objectives are things like what markets should you trade? Are you going to trade only Forex? Are you going to trade futures? Are you going to trade stocks? Are you going to trade crypto? Right? Those are examples of markets. And this is not a financial objective. Another type of non-financial objective is what style of trading are you going to use? So are you going to be an intraday trader, meaning you get in and out on a daily basis? Or are you going to hold your trades overnight? Or are you going to hold your trades for weeks or months, right? Why am I talking about non-financial objectives? You need to decide these non-financial objectives in order to come or arrive at what kind of strategy am I going to trade. So the strategy that you trade is based on the decisions that you have made regarding non-financial objectives. Okay, so you might decide, okay, I'm going to trade Forex and I am going to be an intraday trader. I am never going to hold my trades overnight, right? That is an example of a non-financial objective. You need these non-financial objectives in order to decide what type of strategy you trade. So if you're an intraday trader and you come to me and I tell you I hold my trades overnight, sometimes for days or for weeks, right? If that style does not fit you, you cannot trade the way I trade. But none of this has anything to do with your position size. All this has to do, everything in the non-financial objective has to do with your trading strategy. Remember, I told you I'm going to establish that your trading strategy is different from your position size. So when you talk about your trading strategy, all these things in this box, these non-financial objectives, they all relate to your trading strategy. However, when you talk to someone and you say, how much do you want to make as a trader? And then the person tells you, okay, over a 12-month period, I want to make 50%, right? Now you're talking about a financial objective. And the only way you can achieve that financial objective is based on your position size. Okay. Now, let me talk about 4 types of traders when it comes to financial objectives, right? Really, really important for you to understand this concept. 4 types of traders when it comes to financial objectives. Category number 1, when you talk to these traders and you say, how much do you want to make as a trader? They say, well, I just want to make money. They don't have any targets, right? That's like the worst position to be in because you don't even know what you are trying to accomplish. Okay. And if you don't know what you're trying to accomplish, how are you going to know if you hit your objective or not? So that's the first category. These people have no targets. They don't know what they want to achieve. When you say, why are you trading? They tell you, I am trading because I just want to make a lot of money, right? That's not a very useful category to be in. The second category of traders will be people when you say, how much are you looking to make? They tell you, okay, I'm looking to make 50% in 12 months. All right, now you're better than the first category because you have a specific financial target. However, your own picture too is not complete. It's not complete because you have not said how much you are willing to lose, right? And that's the third category of traders. So when you say, I want to make 50% in 12 months, you need to also say, I am willing to lose maybe 10% of my account over that period of time, or I am willing to lose 20% over that period of time. So you can't just say, I am willing to make 50% without saying how much you are willing to lose. Now, that's the part where, a few people don't talk about it, but you have to talk about it. When you say how much you're willing to make, you must say how much you are willing to lose, right? And that's the third category. The fourth category of traders, these ones are the people who are completely enlightened. They understand that trading is about probabilities. So when they are stating their financial objectives, this is how they speak. I want an 80% chance of making 50% returns over a period of 12 months. So now they are assigning a likelihood of success to the objectives that they are setting. Right? I'll take that again. You need to assign a likelihood of success to the objectives, the financial objectives that you are setting. So when you say, I want to make 50% profit, so I need to ask you, what is the chance that you are associating with that 50% return? Is it a 10% chance? Is it a 20% chance? Is it a 90% chance? Or is it a 100% chance of making 50%? Which one is it? You need to know that. And I'll show you how you can figure that out. The same thing applies to drawdown. When you say, I am willing to lose a maximum of 10% of my account, you need to also say, what's the likelihood of that happening? You can't just say, I'm willing to lose this, right? You need to also say the chance of that happening is 50% or 60%, right? Now, this may be a new concept to you, right? But by the time I show you the case study, you will understand why all of these numbers are necessary when you talk about financial objectives. The main takeaway here is that there are two types of objectives. Don't just focus on how much you want to make when you're talking about financial objectives. You need to also note or be aware of how much you are willing to lose. That's what we refer to as drawdown, right? And the likelihood of you hitting your profit target or your drawdown target. You need to know the likelihood of those objectives happening. Okay. So that was a lot to digest. If you don't understand it, I will make it clear in a couple of slides. But if we're all together, please just drop a 5 on the chat, because I know that was a lot to go through. Okay, but don't worry, we need to go through this foundation so that when we move into the case study, you will fully understand all the things that we've talked about. All right. So we're going to get into the meat of this conversation, but I need to give you a warning, right? There is no way we can talk about the subject of position sizing without doing some mathematics, okay? Now, I can assure you it's basic multiplication and division. There's nothing more complicated than that, but just let's be fair, right? And let me just let you know that there's some mathematics involved. All right, so the next thing we're going to do is, I talked about earlier on, so if you remember this slide, point number 3, position sizing will not save you if your trading strategy has no edge, okay? Now I'm going to show you a way that you can tell whether your strategy has an edge or not. Now, the one condition for you to know this is something that Kenry talks about all the time, your documentation. So all the things that you've written down about your trading strategy and its performance over time. You're going to need that information now in order to evaluate whether your strategy has an edge or not. So very quickly, this is a very important slide. This slide tells you everything you need to know about whether your strategy has an edge or not. Okay? It may look, a bit complicated, but I'll break down this slide for you very, very quickly. You see this formula right here, this formula here, win rate multiplied by all these things in brackets needs to be greater than 1. That's the formula that tells you whether your strategy has an edge or not. So what's the process for doing this? If you have a strategy that you trade, right, and you have a sample of results from that strategy, okay, hopefully you have a significant enough sample. So minimum will be 30 trades. I would typically recommend 100 trades or more, right? From that sample of trades, there are 3 things that you need to calculate. Number 1 is your win rate. So how many times did you make money divided by the total number of trades, right? That's your win rate. Then you need to know what your average win is and your average loss. How do you calculate your average win? You look through your documentation and you see all the trades where you made money. You add those trades together and you divide by the number of trades where you made money. So if you have a sample of 100 trades and on 40 of those trades you made money, right? And the total money you made from 40 trades is $4,000. Your average win is $4,000 divided by 40, right? That's how you do it. A similar thing happens when you're calculating your average loss. From your documentation, you look at all the losses that you made from your sample, you add the dollar value of the losses, and you divide by the number of trades where you had losses. That's how you get your average loss. When you have those 3 numbers, you plug them into this formula, and you are looking to see whether the answer is greater than 1. If the answer is greater than 1, then it is very likely that your strategy has an edge. So this is a mathematical way of determining whether your strategy has an edge or not. So let's do a very quick example as we show on the slide, right? So let's say we have a 40% win rate, which is not unusual, and that every time we win, on average, our average win is $2,000, right? And our average loss is $1,000. Now, if you put all these numbers inside here, you have 40% multiplied by 1 plus 2,000 divided by 1,000. So inside this bracket, you're going to have 3. So this is 40% times 3, right? That is 1.2. 1.2 is greater than 1, right? So your strategy likely has an edge. What I've done is, okay, let's show this in a visual form. So if up here you have the average win divided by the average loss, and down here you have your win rate. What did we say the win rate was? We said the win rate was 40%, right? That's this line. And average win divided by average loss here is 2,000 over 1,000 is 2. So it's here. So by the time you come down this column and across from this row, you see that it's where this star is, right? That's like where your strategy has landed, right? Now, I've color-coded this such that all these places that are green, right, is where you will have a value greater than 1. All these places that are red, the value is less than 1. All these places that are orange, the value is equal to 1. So these places that are orange, your strategy is break even. If your strategy is anywhere in this red box, right, you are likely going to lose money. If your strategy is anywhere in this green box, right, you're likely going to make money. Does that make sense? So if that makes sense, let me see a 9 on the chart, right? If everybody understands, just the general concept, okay, and let's know that this math is not too intimidating. Okay, all right, awesome. Okay, so this is just a visual way of you evaluating whether your strategy has an edge or not. So whether your strategy has an edge or not should not be guesswork. Number one, you need documentation. So when we say documentation, what are you documenting? Your win rates, average win, average loss. If you have a significant enough sample, you do this calculation. If it is greater than 1, congratulations, you have a strategy that has an edge. If you do this calculation and your strategy is less than 1, do not bother trading that strategy live, right? Your strategy likely has no edge. You may make money over 1 or 2 trades, but over the long run, I can guarantee you that you are going to lose money if your strategy does not have an edge, okay? So this is what you need to check first before you start thinking about position sizing. You need to ask yourself, do I have a strategy that has an edge? How do you know? There is a formula for it, right? You calculate that formula, you calculate it based on your documentation. If it's greater than 1, congratulations. If it is not, you have more work to do. Go and look for another strategy, okay? So this is how you know your strategy has an edge or not. There's one more concept that you need to understand, right? We talked about drawdown, okay? So I need to go through this quickly before we look at the case study, right? Because this is important, and this is maximum drawdown. So if you've used a prop firm before, obviously, they talk about maximum drawdown, or maybe some of them call it maximum loss, right? I've shown visually, right, what maximum drawdown is. Okay? So for maximum drawdown, I've shown you an example of an equity curve. This blue line is like how your balance is basically changing as you are trading, right? So you start with $100,000, goes up, comes down, goes all the way up, comes down, and it looks like it's going up again, right? How do you calculate maximum drawdown? So for maximum drawdown, you need to look for, like the highest point that your equity went to. And from that highest point, the distance from that point to the lowest point. That's really what you're looking for. So anytime you make a new high in your equity, you're looking for the maximum decline in your account from that high. In this case, in this account, from $100,000, we got to $135,000. And then from that point, we came all the way down to almost our initial 100K. But the distance between this highest point and this lowest point is $32,000. So in dollar terms, this is your maximum drawdown. Okay? But if you want to calculate this as a percentage, you don't divide by 100,000. No, you divide this by the highest equity that cost the drawdown. That's really the point I want to make here, that you don't say, oh, because I made a drawdown of $32,000, then I need to divide by 100,000 to figure out what my maximum drawdown is. No, right? The maximum drawdown as a percentage is this 32,000 divided by the equity high that cost it, which is this point right here. So in this case, the maximum drawdown as a percentage is about 24%, right? So when we talk about drawdown, just keep that in mind, how maximum drawdown is calculated so that you don't confuse it. Now, let me just make the point that, so you see at this point here, we got to this point in the equity, and then your balance declined to this point. This is also an example of drawdown. But just by looking at the size, it is not the biggest drawdown you had in this account. So we are only interested in the biggest drawdown that you had in the accounts, not all the tiny drawdowns that you had along the way. Okay, let's just establish that point. All right, I think we're ready for our case study now, and it's going to be a case study on position sizing. Now I'm going to use a prop firm as an example, right? So just put a 6 on the chart if you know what a prop firm is. You've had one, you've used one, you've blown an account with one. Just go ahead and put a 6 on the chart, right? So that I know that we all know what we are talking about. Awesome. Okay, so people on this call are familiar with proprietary firms, right? Now I've put a screenshot of some statistics that were provided by the CEO of a very popular proprietary trading firm. So he put this information out there on the 11th of January. And this is what he was saying, right? In the last 60 days, so over like a 2-month period, the number of traders that failed 3 or more prop firm challenges is nearly 12,000. So think about what that means. 12,000 people use their money. They bought 3 or more challenges, right? And they failed all 3. 12,000, right? The number that failed 6 or more in that 60-day period, about 3,400. The ones who failed 9 or more, 1,462. And then maybe like half of that failed 12 challenges or more in a 60-day period. There were 775 people who bought at least 12 challenges and failed all the 12, right? There are a number of takeaways from this thing. Number one, do not be carried away by what you see on social media, where it appears that everybody, their grandmother and their dog is passing challenges. It's a lie, right? This is from the CEO of a prop firm who is telling you that 12 people bought challenges, or rather 775 people bought 12 challenges in a 60-day period, and they failed within 60 days, right? A lot of people fail these challenges. And a big reason why they fail is because they do not properly understand this subject that we are looking at today, which is the subject of position sizing, right? If you understand position sizing, right, to be honest, it will be very difficult for you to fail a prop firm challenge. All right, so let's then move on. Having said that as a background, we are going to use position sizing to ask ourselves a question. Okay, how can you pass a prop firm challenge before placing any trade? So what will give you the confidence when you are buying a prop firm challenge that, you know what, I am likely going to pass this prop firm challenge? I'm confident enough in my ability that I will know that I will pass the challenge. Let's use that same strategy that we had before, right? Your win rate is 40% and your average win to average loss is 2.0, right? It's the same strategy that we saw before, and we know that that kind of strategy has an edge. The specific rules do not matter, right? It's just that you've done your documentation, and then your documentation tells you your win rate is 40%. And on average, the average win to average loss is 2.0. Now, this is the question, right? You'll have 20 trades to take, only 20 trades, right? And you're trading with a prop firm where they want you to make 10% and you cannot make more than 10% drawdown, right? So this would be typical of like FTMO or something like that, right? So if you make 10% profits, that's success. If you lose more than 10%, that's ruin. Now, let me ask you. Now, let me see what your answers will be on the chart. What percent of your account should you risk per trade? You have only 20 trades. Okay? So let me see. What do you think? How much do you think we should risk per trade in this situation with this kind of strategy? So 40% win rate, average win to loss of 2.0. All right, so let us see. Oh, 3. When I say 3, is that 3%? Oh, I just want to be sure. What percentage of your account? So, Abby, is that 3% you're writing? I just want to be sure that I'm reading correctly. Okay, 3, 2, 3, 0.5. What's between it and 0.5? A lot of people like 0.5 here. 0.5, 2. This is more like it. 2%. No, don't mind me. I'm just running commentary. All right. 1.5. Okay, that person is a good negotiator. Yeah, you're just in between. Okay. All right. So I think what's really important is, like asking the question, how do you know if your strategy has an edge, right? There is a way to calculate it, right? In a similar way, there is a way to calculate this, right? If you know your win rate and you know the average win and your average loss. Remember, we want to take 20 trades. So we've told ourselves, I want to pass this challenge in 20 trades, right? So the question really now is, what percentage of my account should I risk? Now, there is a tool that you can use, and the tool uses a technique called Monte Carlo simulation. The name is not important. It's really for you to understand how it works. Okay, so basically this thing just runs different simulations with your system's parameters, and it will tell you what the answer is likely going to be for the parameters that you've mentioned. Now, I've already run the tool. I mean, running the tool here is not of interest to you. It's the results that are important, right? Because that's where we will learn lessons. So let me show you what the results of that tool showed for this kind of system. So remember, we have 20 trades, win rate 40%, and your average win to average loss is 2%. Is 2.0, sorry. Let me explain what you are looking at on this chart, right? At the bottom here is the different amounts that you can risk. So you will recognize all the answers that you were putting on the chart, right? 0.5, 1%, 1.5%. Some people said 2.5, somebody said 3. So you recognize all those answers that you were putting on the chart, right? So this is how much you are risking, right? This vertical axis is the chance of you meeting the objective. So remember, we talked about objectives, financial objectives, and we said that they have a likelihood of happening. So passing a prop firm challenge has a likelihood. There's a chance that you will pass it. There's a chance that you will not pass it. You need to be aware of that before you start the challenge. Okay. Now, what do this green, or rather this blue and orange curve mean? This blue curve is the chance of you making 10% profits with this risk. So let me start from here. If you use 0.5%, if you risk that, the chance that you will make a 10% profit at the end of 20 trades is about 1%. If you take this all the way here. But let me use 1% here, right? And then use it. So if you risk 1%, the chance of you making a 10% profit after 20 trades is you just follow it up to this blue line and then come to this place. And you see that is about 25%. You only have a 25% chance of making 10%. In fact, if you even risk 4% per trade, come all the way to this blue line, you have about a 60% chance of making 10% at the end of 20 trades. Okay, so that's about your profit. Let's look at drawdown. So drawdown, obviously, if you don't risk anything, right, you have a 100% chance that you will not lose more than 10%. Makes sense, right? If you don't trade, you're not going to lose 10%. So that's why this is 100%. But you notice that as you start increasing your risk, the chance that you will stay within the 10% drawdown limit is now reducing to the point that, for instance, if you risk 3.5% of your account, the chance that you will not lose more than 10% is only about 15%. It's a very, very small chance that you will not blow your account. What does this mean? The more you increase your risk, the greater the chance of you hitting your profit objective. However, the more you increase your risk, the greater the chance of you blowing your account. Now, the real answer is, what was the answer here? It's like the optimal answer is where these two curves meet, this blue curve and this orange curve. And you see that they meet somewhere around 2.6%. Now, with 2.6%, it means that you only have about a 40% chance of passing the challenge, but you have basically a 60% chance of losing all your money, right? Because this is the number where the two curves meet. So does this mean you can't pass your prop firm challenge? Of course you can. If you're risking 2.5%, 2.6%, you can. But just be aware that if you buy 10 challenges, you will likely pass 4 and you will blow the other 6. That's what this 40% means, right? Hopefully that's clear. If you buy 10 challenges, you will likely pass 4 and you will likely blow 6, right? If you're giving yourself 20 trades. So now, I want to change this scenario slightly. And instead of you trying to do this in 20 trades, why don't you do this over 100 trades? So you're giving yourself more time, right? If this was 100 trades, the exact same strategy, what would the answer be, right? So let's come to this point, right? Now, this is the answer if you give yourself 100 trades. Notice where the optimal risk is now. The optimal risk is somewhere around 0.8% per trade. But notice that at 0.8%, now you have about a 65% chance of passing your prop firm challenge and staying within drawdown limits. The other thing I want you to notice is look at this blue curve, right? The highest chance of success is not even up to 80%, right? So the other thing to learn is that's why we say there is no strategy that is 100%. There's no matter the strategy you put here, this blue line will never get to 100%. But if you give yourself more time, right, you can be able to pass that prop firm challenge with a lower risk and increase your chances of passing the challenge. That's really the point here. Again, look at how steep this curve falls once you increase your percentage. By the time you're risking 1.5%, even though you have 100 trades, right, you have a very high chance that you are going to blow the account. Very, very high chance. Okay. Very high chance the more you increase your risk. So that's the message here. Now, let's tie all these conclusions together, right? And let's come up with some insights. The first thing is, before you decide to trade, right, you must have very clear objectives for what success is and what ruin is, right? So what are your financial objectives, right? That's another way to say this. Of course, you know how we say it. If there is no vision, people perish. And what I like to say is direction is more important than speed. If you don't know what success is, if you don't even have targets for what you're trying to hit or targets that you are trying to avoid, right? You can't craft a sensible position sizing strategy. You can't, right? The second point, which hopefully you saw, right, from this graph is if you use a large position size, you are increasing your chance of success, but you are also increasing your chances of ruin. So that's where if you want more reward, you have to risk more. That's where it comes from. Now, this third point is something I also wanted to highlight, that notice how in the two examples we looked at, 1% was not the answer. So let me just go back, right? This is the first one we looked at. This is 1% here, right? It wasn't the optimal answer in the case of 20 trades. In the case of 100 trades, 1% was also not the answer. Okay? So that 1% thing is more something that people have come up with, but there is no basis really for 1%. Now, having said that, let me come back here. So now you've seen the answer here is about 2.5%. Does this mean that you should immediately go and use 2.5%? Well, it just means you need to be aware what your chances are. Your chances are really low overall of hitting your objectives if you're risking a very high number. That's really the message. Okay, so risking 1% per trade is not always the optimal answer in your situation. You need a simulation based on your documentation in order to come up with this. Now, you may look at all this and you say, I'm not comfortable with the chance of me blowing my account. Well, there are two things that you can do. Number one, look for a better quality system, right? Goes without saying. That means the system you have is probably not good enough for what you're trying to do. Or very simply, reduce your position size, right? While you are looking for a better system. So those are two things that you can do and the way you can play around with position sizing. Obviously, we can get very, very creative with this and then start asking ourselves questions like, okay, if we have a better system, how does that impact our position size? But really, the message here is understand how to calculate whether your system has an edge, and then recognize that with proper documentation, you can craft a position sizing strategy that will give you a sense of how likely you are to be successful in hitting your objectives, such that whenever the objectives play out, you are not surprised that you either hit your objectives or you missed your objectives. And to be honest, that's it. That's what we had today on position sizing. Okay, so I'll turn this back to Kendry to also help see if we have any questions or comments on the slide that we need to deal with.
Wow. Let me take a breath. Let me take a little seconds for some little breath. Everybody breathe in and out like 3 times. If you're done, please done on the chat. Then I can begin to speak what is on my mind right now. Hold on a bit. Wow. There are things. So there are actually things. Things are happening. Things. I told you guys that when you get exposed to some certain things. Okay, let me just ask a question right now before you guys throw questions at me. I want to ask you guys a question. How many of you feel like you are not going to trade this week that is coming? You need to really learn something you never knew. How many of you had that feeling while you were learning these things? How many of you had that feeling that you've been joking with trading? Now you have to go look at your trading very well. Put 10 on the chat. How many of you personally reevaluated yourself that you have been joking? It gets big. I told you today it's going to touch you, all right? Because and it meant a lot to me because I have context for education now, direction for education. It's like if you get into my class, I have a cane. there's a cane waiting for you. When it's like we just created a cane structure. So as you are learning, the cane is you. It's not me that will be asking you the question. It's you that will be judging yourself. Okay, so super excited. I put two very beautiful questions down, but meanwhile, please let's put some I am grateful, your most favorable emojis on the chat, and let's thank Mr. Chijoke for this wonderful insight knowledge. It gets better. Environment is everything. Even if you guys didn't pay a dime to be here, uh don't treat you're going to find out that it had nothing to do with money, it just had everything to do with environment. And this kind of knowledge is priceless. So be grateful on the chat. Put I'm grateful. I'm grateful. Put I'm grateful for that knowledge. If you're not grateful, you get nothing from it. Gratitude is a multiplier, it's an amplifier. Okay. So before you think of throwing question, just put I'm grateful. Thank you very much. So every one of you can go ahead and put your question, but I promise you if you start asking questions, it will lead to questions, because now some of you, your brain, we left your brain in the first slide. Okay. Some of you, your brain was in the first slide. Like it's like we left you alone. All right. Because you had to do a lot to catch up. There was so much value in each of the slide. That is why we have a recording. That is why we have an opportunity for you guys to have questions. So in case we left you on the first slide or the second slide, we did not carry you along, or somehow, not that we did not carry you along, you refused to enter the bus because you felt like they are carrying you to where you don't want to be. Okay, you can actually ask how we can come and carry you now. Okay, so if you have a question, drop it on the chat. Meanwhile, while they are trying to pick up their question, I have this amazing question, okay, written down to ask for us. What if the strategy I am learning from, or should I wait? Let them ask question first, because some of them will not hide in my question. It's like I've asked their own mind. No, I don't want to ask your mind. So let me leave my own question. Okay, because I'm perceiving that they will just hide in my question. It's like I want to ask for them. So if you have a question, type it on the chat. If you want to voice it, no, you should be able to type it on chat. I remember this awesome gentleman from Double Blessing days when he introduced us to crypto. I love the way he teaches. Wow. Thank you. Okay. Okay, you guys have questions? Just put it on the chat. What is your position relating to days you trade in the market, like Mondays and Fridays?
Okay, so let me see if I understand that. So do I use different position sizes based on the days of the week? Is that the question? Or do I trade Mondays and Fridays? Is that the question? Which one? So is it a sizing question, or is it a question about the days of the week when I trade? If it is the days of the week, I mean, if I get the signal to trade, I trade it. So to me, my own style of trading, it doesn't matter if it is Monday or Friday. If the market is moving and I have a signal, yep, that's fine. So again, remember, my trades typically last for weeks. So I'm not looking to get in and out on any particular days. Oh yeah, whether I trade Mondays or Fridays. Yeah, so I mean, it doesn't matter. I mean, I take trades on Mondays, take trades on Fridays. It doesn't matter. Because whatever day of the week it comes, I take it. If you're an intraday trader, then clearly you may need to be sensitive based on what your documentation tells you. You may need to be sensitive about the days of the week that you trade. But if you're a swing trader, if you last for a couple of days or for 2 weeks, then it really doesn't matter. It really doesn't matter.
Okay.
All right.
Is there any other question? Can we please have the first recording so we can understand it fully? Of course, it's on my, I'll post it. Okay. Let me just post it quickly so we don't, okay, I have to search the, okay, don't worry. I'm going to post it on the Telegram channel. I'm going to post these two recording on the Telegram channel. If you're not on the Telegram channel, please, someone drop the link on our Telegram. Make sure you go join the Telegram. Okay. So according to Chijoke, there is no trading strategy that is 100% accurate. Can you provide more insight on the combination of trading strategies that can give you better winning strategy?
Yeah, sure, I can. That will probably be another class, but let me say it this way, right? So we talked about under risk management that you should not trade a single strategy, right? It is not healthy for your long-term returns. So you should trade a portfolio of strategies that are diversified. Okay. Now, the way to achieve diversification is to base your trading strategies on different concepts. Okay. So we can have another session where I talk to you about trading concepts, but an example of a trading concept is trend following, right? So there are strategies that follow the trend, which means when markets are making all-time highs or they are making new highs, right? That is when you get in. That is the true definition of trend following. Okay? Buying on dips is not trend following. Okay? It's mean reversion. That's the proper technical term for buying on a retracement. It is not trend following. Trend following is buying when a market is making a new all-time high. Then you are following the trend. If you're using any kind of strategy where it has to retrace and then you resume the trend, that's a mean reversion system. It is not a trend following system. Okay. So there's trend following, there is mean reversion. I've told you that there are strategies that are based on bias, right? On this call, Monday, I talked about the tendency of gold to close up on Fridays. Okay, you can go and look at last Friday and see what happened. So, so, so gold has a tendency to close high, to close up on Fridays. So that's a bias, right, in the market for gold. So if you have a system that is based, okay, well, let me describe what I do. So I trade a portfolio of strategies, and then each strategy in the portfolio is based on a different trading concept. So I have trend following, I have mean reversion, I have seasonality, I have value, and I have bias. Those are the 5 concepts that I base my trading on. So if you combine strategies from all these things, that's how you achieve diversification. Diversification is not you are trading different markets. I'm trading Forex and I'm trading crypto. That is not diversification. I'm sorry to say, right? You are trading different markets. There's one single event that can happen and all those markets can crash. Crypto and Forex, right? It has happened before. So you're not truly diversified. It's even worse if you say you are diversified because you are trading different cryptocurrencies. They are all the same market. So a single event can reverse your positions and take you all out at the same time. So about an insight about portfolios, understand what trading concepts are. Then for each trading concept, have strategies based on that concept, right? Then when you combine those together, because the market characteristics are different, you find that when your trend following system is suffering, your mean reversion system will likely be doing well. If those two are suffering, your seasonality system may be working, your bias system may be working, your value system may be working, right? So that's the idea. That's how you build a robust portfolio.
Please, can you, for the purpose of, this is a selfish request. The last two things you reply now,
Yes.
that is based on diversification. Can
Yes.
you please, if the English is not elaborate based on time, just repeat it. I think repeat that question, repeat that elaboration again, please.
Okay.
And while he's repeating it, I need you guys to put in context based on the things that I share with you guys on the call. Because me, I also want to take something, okay, from this. I learned something just in this conversation right now. Mean reversion, I'm a trend-based, okay, but I have a strategy of, oh, my system is not charging. Hold on, just 1 minute. It's about to go off. I don't know why. Okay, good. I'm a trend. I'm a trend-oriented trader. Okay, and I just learned something in trading a trend. Okay, so there are strategies for getting into a trend, and one I just learned now that one of those strategies that I call trend trading is actually mean reversion. Is one strategy to get to assume that the market will continue a trend. Okay, so that's one thing that I know. So I just told my brain now. Okay, Kenvry, when you say you are trading a trend, you're following a trend, you're literally not actually following the trend the right way. You are using a strategy to follow the trend. I just learned that right now, okay? And I want something to be repeated about diversification. What you think about diversification? That statement you mentioned right now, just elaborate on it again.
Right. Okay. So diversification, I mean, generally, if you go online and you look at, what's diversification, you generally hear things like put your money in different places. Let's start from that very general place. Put your money in different places. When you talk about diversification in trading, people generally tell you trade different markets. So trade Forex, trade crypto, trade stocks, right? Then you are diversified. But I'm here to tell you not necessarily. If, for instance, you use the exact same strategy to trade Forex, crypto, and stocks, then I can happily tell you that you are not diversified, right? Because the same risks that apply to your strategy can apply to all those markets at the same time. Okay? We have seen
Example like
examples of market crashes where the stock market collapsed, crypto collapsed at the same time. As in, everything just went down at the same time. Right? So the fact that you were in different markets trading the same strategy does not mean that you are diversified. The way you are diversified, true diversification, is knowing when you are likely to get into a trade with a strategy so that other strategies are not getting into the market at the same time. Do you understand that? So that when you're trading your trend following system, right, your other systems are on the sidelines just waiting, right? And then when your trend following system is likely not to perform properly, the other systems, that's when they are getting into the market, right? So that you don't have multiple trades from different systems overlapping, and then if the market crashes, everything can just go down at the same time. So true
there's a
diversification
serious confusion.
is trading different concepts that behave differently, right? So that's where you're really diversified, so that your P&L, your profit and loss, you don't have multiple losses in the same day, right? So this thing has happened to me before, where you have positions open in Forex and crypto, right? Then Trump wins an election and then the markets just collapse, right? Or there is a Ukraine-Russia war, right? And then all the markets go crazy, and you're in different markets at that time and everything just collapses at the same time. So just be aware of that when you're talking about diversification. It is based on concepts,
Okay.
not necessarily different markets.
Thank you very much. I asked that question more to lay foundation for, the question that I said I had, because personally for myself, I think I am getting ahead of you people by loving this conversation more like I'm the one who's being taught, because the truth is I am learning like a student here right now. So I have the question that I asked as my mind, as I'm listening to this as a student, while you were talking about the strategy, the percentage strategy. Okay, that's the first question I had here was, what is the strategy that I am learning from my coach or my mentor, or I have a community? We have a strategy because a lot of people are team oriented. So they have coaches that are standing in front telling them that, you don't need to know how to trade. Okay, we have a trading strategy. Let me just call the trades for you, or I'll give you the setup. I'll teach you how to follow the setup and you just trade them. Okay. And the strategy. So what if the even me when I say that, right, I'm laughing. Yeah, but a lot of people are like that. They hide under the crowd. We have a community. We have a strategy. So not them. Because a lot of people, trust me, out of every 9 trader that I know, okay, only probably 2 or 3 would say I have a documented trading strategy. Okay. What a lot of people will say, I'm in a group, we have a strategy. I mean, if you agree with me, put 5 on the chat. If you don't agree, that's okay. All right. So if you fall in that category, the question you'll be asking this question: what if the strategy we're learning or we're trading with our coach, our community, has an edge? Like Ken Remo. Ken Remo's price trap, okay, is 70% out of 100 trades, even on his live trading. So what I just did is when it calls the trade, so I want you to understand the category of this person that is asking this question, because a lot of people, they are like this. They they tend to do things based on hiding and not being responsible for owning a strategy. So one of the questions I'm even asking here is it okay to say I am taking trades from a community, or we're taking trades, or administering trades from a community that has a win rate? Okay. So if our edge is more than the one you just give right now, so what would be my approach since I'm in that position? What would be my approach? I have a winning strategy, or we have a winning strategy that has an edge. Okay. And it will even go further that the trades are always available. So what would be my approach as to applying what you just the position sizing? Can I trade with the position sizing knowledge you just given? Okay, if I, or I should make sure I own my, in respect to that answer, and if I should own it up.
Right. Okay. So I mean, this one is very simple. Henry's 70% is not your 70%. Okay. So that 70% will come from, for instance, Henry's documentation. If your own documentation does not show 70%, then you need to use your own win rates based on you executing the trades. Okay. Now we can have another. I know I gave you a formula for finding if your strategy has an edge, right? There were 2 other components that I didn't talk about today, right? When you're really talking about how sustainable is an edge, right? Unless you have taken those trades yourself and you have documentation to show that you can replicate 70%, right? You should go with whatever win rate is in your own documentation, meaning you took your own trades and over a sample of trades, you got 70%. Even if you're taking signals from somebody, right? Right? So you can't go ahead and just take those signals live. You must own your results. You must take full responsibility for your results, right? So if somebody is giving signals, you can take those signals in a demo account and keep documenting your execution over time. And then after maybe 30 trades, 40 trades, you ask yourself, what's my win rate? What's my average win? What's my average loss? If your win rate is different from your mentor's win rate, right? Your mentor is already at a different stage, right? So you can't remove your own execution from it and say, my mentor has 70%. Therefore, by osmosis, I receive, or by impartation, I receive his 70%. And then I now start trading live in the hopes that I'm copying his trades and I will achieve the same results that he will achieve. It doesn't work. It doesn't work like that. It doesn't work like that. The other
Thank
thing I
you.
tell people is that in terms of execution, right, you cannot remove the person from the system. Right? What do I mean by that? Your mentor may have 10 rules, right? And he may have told you 9 of the rules that he uses, not because he wants to deceive you, but because he doesn't know that the 10th thing that he does is important to his success. For instance, he may just look and say, The way I'm looking at price action now, I'm getting out of the trade and he will get out, right? But he may be in transit when he's getting out of the trade. And you will be there blissfully unaware. You're looking at the same candles, you're not seeing anything. You're just saying, my mentor will tell me when to get out. And then I've seen this in some other communities, right? Then when everybody is posting results, it's only the mentor that has results. And then the mentor will be like, you are still in the trade? Oh my goodness, I left long ago. Didn't you see that candlestick pattern? Oh dear, what were you still doing? Oh my God. I left now. I made 5%. What did you make? Oh, -3. Oh my goodness. Oh, I'm sorry. I'm sorry. I should have told you. So your mentor may have that as a rule. He may not even know that it is a rule, right? Which is another thing about following another person's system. So be sure that with your execution, you have the documentation to support the position size that you are trading, not another person's results. Very, very key.
Wow. Wow, so much wisdom in that. Leads me to the second question. You did a 40% win rate with a two ratio average
Yeah.
on the win to losses. So what if my strategy documented, my trading system has a, let's say, a 70% and above, where would be the cosmos something? What would be my approach?
Yeah. Okay.
Just an
So,
insight.
right. So what you would do, okay, I don't know if we have time here. I'll just have pulled up the tool that I used to compute all those graphs, right? So if your win rate is 70% and you have, let's say, that same 2-to-1 average win to average loss, right? The edge for your system will be much higher than the one for the example that I showed. Okay. So if your edge is much higher, what that means is that if you use, a higher position size, right, the chances of you blowing your account are lower because your edge is much higher, right? So now that speaks to the quality of your system. So remember that thing we said about position sizing insights. If you're not comfortable with the simulation results, then look for a better quality system or reduce your position size. So if you have a win rate of 70%, then you found a better quality system, right? If we run the numbers, you will see that, with the same 1% or higher, right, you would easily pass a Prop-Firm challenge with that kind of system because that system has a really high quality, I tell you. Really, really high
Okay.
quality.
I love that. One of the things what I would do. So there's something I'm going to do tomorrow. We normally have our sessions on Monday night. So I would request. I'm going to request of you to do a simulation on, if you can do it, probably on a 50, 70, and 90%.
Yep.
Okay. Based on what the chart, the graph looks like, so we can just see visually, because there is, aside the fact that we're giving every one of you, we're exposing you to this knowledge, is the implementation that really matters. So how do you implement? Tomorrow I'm going to be, from my understanding of what I know about this position size and how much your strategy edge gives to you, I'm going to be giving you ideas. I'm talking to the team right now. I'm going to be giving you ideas, but I actually need you guys to see the data, so you don't, when I'm saying it, you don't say it came from me. This is from the training. So you guys saw an edge of 40%, and there was a reason it was on 40%. Okay. I believe he did it deliberately to be on 40%.
Yeah.
Because the truth is, if you don't have a trading system, okay, you are on 40, you are already less than 40. You're not even supposed to be thinking of anything above 50. You are not even, so 40 is a blessing to you. Just so you know that if you don't have, you're not even at 40. But if you do not, a lot of people have strategy, but they don't know the edge. The system is actually less than 40. So 40 is a big number to be talking to the crowd. Okay, so, but we also need to now see, how much impact would they make for us if we now have more than 40? So that's one of the things I'm going to be dealing with tomorrow with the nation. And so I'm going to be taking the data he will be sending to me, and maybe probably I'll just, probably if it's available, okay, we'll just, bring it in, that if it's available, actually. But my brain, my mind, I'm just here, Mr. Chijoke. I'm seeing so many reasons to tell traders. I'm just, why you're doing this education right now, I'm seeing one is, I know my student will get hit from me from this week. So first thing is, why they will get hit is this. If it's me telling them these things, okay, some of the feel they get used to my voice too much. All right. Maybe I've been speaking, they don't understand. I don't have the details you've shown, but one thing that I have is I've documented and I have a system of trading. Okay. I did not learn like this to know this is what I was supposed to do, but over time I've experienced, I've documented, and I have become a form of what you're teaching. And this is what I tell people. You're confident in trading. Trading is about confidence. Confidence is about knowing what you've done over a period of time. Period. Simple. It's as simple as that. Nobody can tell you otherwise what you know. And what you know is what you have done. It's not what you're assuming. It's not what you're thinking. It's not what you are you're saying, okay, let me, what's that word? Predicting. Trading these days is about people predicting, emotionalizing the market based on how it's moving on sentiment or just some few technicals. It's about data, what you've done over a period of time. So there's a big question for me here right now that would you say, okay, anybody who's a trader right now, okay, what would you say is the best approach to learn, best approach as a trader to reorganize learning? To reorganize learning in 2024. If you've been a trader and you truly want success, and if you're doing a whole lot of things, okay, what's your best approach? If you have a community, you have a mentor, you have a coach, what's your best approach to reorganize your learning?
Okay. So I'll answer this question in two parts. Because I get this question a lot in different ways. So the first part is what's the structure? What should that structure look like? Right. And then the second part is what's the process? So one is structure, the other is process. Let me separate those two. So by structure, what do I mean? The first thing you will need to do if you want to get into trading, right? Usually I tell people if you want to learn trading, plan that you will not take a live trade for 12 months. Okay. So the question is, what are you going to be doing in 12 months? You need to first of all understand the terminology associated with trading, right? So just terminology. What is bid? What is ask? What is spread? What is a broker? What are the different markets? You're just understanding terminology, right? The second part is you now need to understand principles. What are the different trading concepts, right? How do you validate systems? How do you test systems? What are the non-trading systems that you need to be aware of? So remember that conversation about risk management and managing disasters. So you learn terminology, you learn principles, and then you spend the bulk of your time doing something I call guided execution, right? So this is where you help people stay accountable with all this knowledge that you've heard. Okay, test number one, open a demo account. It may be something that simple. Open a demo account and let me see, right? And then the person goes, opens a demo account and they come back. Okay. Number two, these are the rules for a strategy. Take one trade each day this week and bring your results and let me see, right? And then the person does that and comes back to you. Did you make any mistakes? If you made any mistakes, why did you make the mistake? You're doing that. That for me takes 8 to 10 months, right? Before you are even ready to say you are willing to trade live. See all this wishful thinking that I see around the space where somebody just wakes up and they say, I will become a trader in 2 weeks, right? Some of us have been doing this thing now for 8 years, right? And we still wake up every morning with the hunger and desire to actually do this work, right? 2 weeks is not going to cut it. If you want to start from scratch, this is what I'm defining, right? That's the process I would recommend. Learn the terminology, learn the principles, then have somebody who can keep you accountable as you are executing, as you are doing something, opening accounts, taking trades, providing feedback. Where did I make a mistake? Did I follow my rules? Did I take the profits too early? Did I move my stop loss because I didn't want to take a hit? That's the conversation that will build your confidence. Right? So that's what I'll recommend. So that's one. The second part to that answer I talked about is process. Now, usually I tell people there are 4 things, right? And I can only help you with 2, right? So when you look at focus, right, there are 2 aspects of focus. One is if you have a plan, right? If somebody gives you a plan, then you can be focused. The other one is your willingness to follow the plan, right? So I'm sure every mentor can give a mentee a plan, right? So that's how they can help you, but they cannot help you wake up and decide to follow that plan, right? So there's one about learning, the other one is about execution. If you don't execute, you will not build confidence. Without confidence, you will not succeed here, right? So that's focus. The second part of that, right, is your willingness to take responsibility, right? So I can be an accountability partner for you, but and then we may agree that, okay, I'll call you every morning and we'll see how you are doing, right? But then I may call you after 1 week, and then on day 6, you see my phone call and I'll be like, what is it, Seth? Are you my father? Are you my mother? Why are you so interested in my trading? As in, leave me alone. It's my account. I want to blow it, right? So that's the thing about taking responsibility. Are you willing to really have somebody in your face every day? Or are you even willing to do that for somebody else and check on how they are doing, and both of you are checking on each other? You are like accountability partners. If you don't have that system and you just say, yes, I mean, my name is discipline, I can do this all by myself. That's the benefit of communities. So if you have a community, then take advantage of that. You need to be accountable to each other, right? What did you actually do yesterday? Did you blow your account? Did you trade live when we should have been we should have been on demo, right? So that's it. Focus and a willingness to take responsibility for your results, right? Your mentor can help you with half of that, but you need to show up for the other half.
Thank you very much. In fact, while you're speaking, one thing I'm doing here on this call is that I'm just trying to one, being a coach. A lot of people have passed through me. A lot of people are doing a lot of things, So when I expose, one of the things I've made a decision in 2024 is when I expose you to knowledge, I would expose you to tasking. That means for every knowledge I expose to you, I will task you for that knowledge. So as I'm asking this question right now, I'm setting some people up, but they don't know. They will come and meet me this week now, but they don't know I've set them up, or except you are not on this call. So all my students, just know that as I'm asking this deep question, I am setting you up. Because why? You are the reason that I'm asking these deep questions. So that just know that when we start sessions tomorrow, you are in for it, okay? Because this is what we do every day. I always, like you said, I major on documentation. I always talk about confidence. I always talk about, why I asked you that question earlier. So over the course of, let's say, 2-3 years, I've taught on different strategies. And while you were talking about market and what's the other thing? Different market and different strategy.
Yeah.
I just remember concept and strategy. I just remember God has blessed my students because there's something that I always say. I have a concept strategy that follows trend. Okay, they have outlaw strategy. I have price. Each of these strategies are defined. Okay, they are defined to be different approach, which means I could say, okay, that they fall in the category of different concepts. Okay, that if I'm trading price trap, there are times, okay, if the market is ranging, is price, like last week, how many of you realized that it was price trap that I sent to you guys? Because why? That was what was ready in the market. And when he played that, I told you, when the market plays out, what we need in the morning of the week, which is Monday, Tuesday, the market was consolidating from last week. Throughout last week, the market was consolidating. There is nothing trend oriented on the market, okay, because there was no major push, there was no momentum. And what I told you guys, I gave you guys on Monday, I trapped the market, and I told you through Wednesday and Thursday there was going to be momentum, then recorrection, then distribution. Guess what happened? I gave you guys trade. What happened the week? Okay, that was one strategy because of how the market is. One strategy played out, and there are times I'll tell you guys that, okay, what we're looking at for the market is highly trending right now. Let's wait for strong areas. So why I'm saying this is the reason I tell you, don't put all of what majority of traders do worldwide is the moment they see an opportunity, they go trade in an account. They may have 5 accounts. They say, okay, I'm taking this one here. I'm taking this one. Okay, since I've taken this one here, I'll go take this one here. The account does not have definition. It's just like, okay, which one is ready? No, you need to have account for each strategy. Okay, so if you're trading, let's say price trap, you define your price. So you know that it's only price trap that I'm taking here. It's only the outlaw strategy that I'm taking here. If it's the Power 2.0, this is the one I'm taking here. So add over, I say this because, and a lot of people will also say this, okay? There are things in the industry that defies odds. I am one of those person that does those things that defy odds, okay? It's not because you will do it and succeed, but many people are like that. When I was losing in Forex, in demo account, and many people will agree with me, not because it is right, but they agree with this. Some people don't like trading demo. I happen to be in the category of people, not that I didn't like trading demo. I finally realized that I knew how to trade. Okay, I was getting it right, but my emotions were not getting matured. So I needed to challenge my emotions. So I founded a live account because what happened was I have documented and I have won the demo. But the moment I switched to live, it's like the system is not working for the live. So something was happening to my psychology that I needed to bring to the table. So what I did is I used my emotions to bring money to the table. And I said, I was going to trade the system. I was ready to lose that $1,000, but I'll make sure I trade the system because now I'm ready to lose. I wasn't trading to win. I was trading to, let me see if I trade the system, I would lose. So because I had the readiness to lose, I was able to trade the system, and guess what? I never blew that account. And that is where my breakthrough started from. Okay, that's a different approach. Doesn't mean if you do it tomorrow, it will work for you. Because why? There's something about my psychology. I cannot explain it to you. It's me. I documented it and it works for me. So I used it. And that is how part of the stages of my growth started from. And I've said it several times, but a lot of people don't understand. Doesn't mean you can copy it. There are a lot of people that don't trade demo. Okay, all they want to do is go live. And I have said, if you fall to be in that category, I won't blame you. I cannot stop your journey, but this is what you can do. Okay. If you are not loving your emotion on demo, that is because you've not done it over a period of time and you're too in a hurry. But even if you are still in this fast lane, there is a way you can go about it. Not because it's the best advice. Open an account for each strategy and take that account as your means of documentation. So we have the trades, take it in one account, take 10 trades, 20K. If it's a live account, just fund $100 to trade it so that your mind can tell you this is live. Not because you want to win, but you are experiencing your emotions. Okay. So, but don't cross trade because nothing is happening when you're cross trading. This trade come, you take it in that account. This one come, you take it in this. Are you just taking trades anyhow? And over the years, you see that you don't grow. So that is one of these things that I have been measuring in. And while I asked you that question, it was me asking for people to validate why it is important to diversify and not combine. Okay, because as a student in your first stages of growth, your first 1 year, you mentioned some of this right now. Some people are leaving this call. It will slap their brain because they are not ready for such truth. Why would I be learning for 2 years when people are making it out there so fast? Now, that kind of word discourages a lot of people, but they don't know that there is power in that truth. Okay, Kendrick, since you said this, why did I ask that? What should be my approach? Your approach, okay, with the privileges of a community is two different things. What your mindset is set upon, okay, this is what I have been told to do. Let me do this. While you're doing the right thing, do you know you get better? And there are privileges for doing the right thing that will pay you. Okay, you may set a goal to get better, to get well. Maybe something is happening to you, to get well over 6 months or 1 year period. Do you know if you start working the process, you may get well in 2 months? But don't make the goal to get well in 2 months. Make the goal to get well in 2 years, to get better in 2 years, get this result in 2 years. So while you're doing it, if you get better over a period of 3 months, 6 months, it can happen. Okay, it will be a privilege for making the right decision. And that is me just sitting here and listening while you said that thing, and a lot of people will be like, oh boy, are you sure? Come on, this is you. Everybody's not the same. Why would you say that? What would I be doing in 2 years? What you mean I'll just be documenting in 2 years? How many of you had that mindset? Don't report yourself right now. You just thought about that. What would I be doing in 2 years when people are learning trading? I thought you guys said this trading thing is easy now, you know. So I'm just here reevaluating that word, and I'm telling you, when we started, they told us 6 months to 18 months, but we never understood why they told us 6 months to 18 months. The 6 months to 18 months is not for profitability. The 6 months to 18 months is to learn the basics, become the basics learned. Then you can understand the terminology, what it takes to lose and win, and see how you've made a decision that, okay, yes, I've gone over losing and winning. Let me have a proper trading system that I can grow on. It will take you even more than 2 years to 18 months. 2 months to 18 months. I promise you, if we have to be real, okay, it will take more than that to become a trader. Okay, learning to trade and becoming a trader is two different things. So I'm super, super grateful. And yes, I know there may be other questions within. I know there may be other requests. Okay, but one of the things I can tell you this year is we are set to rewrite or correct the mindset of. So there is one thing that you did, Mr. Chijoke, that a lot of people did not realize. You said, but a lot of people don't realize how dangerous and how powerful that was. For a CEO of a prop firm to come and tell you, if you guys did not take that, I screenshotted it, okay? I had it in my armpit, okay? And I'm going to use it and I'll put it in the face of people. For every one of you that is trying to gamble your way into trading and thinking everything you're seeing on social media is a probability that it's going to be yours, just know. And that is not the first time. The first time I heard about our almighty was that broker. 99.8% of people in prop firm lose to the broker, to the prop firm. So just 0.2, crazy. And people are buying account every day and just thinking one strategy will pay you. When we tell you go big, learn, pay attention, stay connected, you think it's a joke. You just think you can just form one 0.2 strategy and just grow an account. It's not the probability or the gamble of it. It's knowing that you want to become a trader. And that is why we're showing you. And we're going to be doing more of this. Okay. And I'm super, super grateful. We'll digest more tomorrow. So I promise you guys on our tomorrow night, we're going to digest more of this information. You guys can watch this recording. So I'm going to drop this 2 recording, okay, on the Telegram group. The link I dropped earlier on the Telegram group, someone can copy and paste. Make sure you watch it, okay? And for every one of you that say you want to better, you want to increase, you want to really get into a community that would help you, okay? Just get back to the person who placed you or get back to us. We have something very beautiful in Power Nation that has highlighted why this call was for you, why it's important to have a coach, a mentor, a community. See, it's not really even about a mentor. It's a mentor that has a community, okay? Because there's a role, okay, a mentor plays in your journey, which is majorly documentation and accountability is key, all right? And one of the ways to grow faster is to grow in the midst of team. Okay, so with a mentor, so there's something that he said right now. With a mentor, what was supposed to take you a longer time can take you a shorter time if you follow through the process of documentation and accountability and you're willing. There's a willingness in you. It's not supposed to take a long time. Your expectations are going to be different. That is one of the things we offer. Okay, the big request that I said I was going to request because I had it in mind. A lot of people are talking about right now. A lot of people are talking about diversification. You mentioned and you reiterated on correcting what the word diversification. A lot of people are getting bored or just doing one thing over a period of time. And some of people, I've gotten a lot of people reach out to me in recent times about crypto. Okay, what would be the best approach to crypto right now? So I am thinking if these people are serious enough, okay, we could have an exposure the way we used to do in these old times. Okay, many of our new audience do not have an approach to crypto. Okay. Wow. From most of the things you did with us in those times, I've grown my crypto portfolio just with those simple knowledge, insight you shared with us in the double blessing days. But I can tell you, a lot of people were present. Some people here probably were present in those double blessing days, but they don't have a proof to show for those information that you shared. Just like in the next 1 to 3 years, some people are here today, they may not have a proof to show for this information you're sharing right now. Okay, but we will not stop what we are doing because people are not using it. So I'm making a request. If we could, if these people are serious, have an exposure on your best approach to crypto now that it is so vicious. What do I do with crypto? I don't know. I have money. What is my best approach to crypto? How can I position myself for this bull run or the bear run that may happen, whatever that's happening in crypto? Okay, as an investor right now, or someone who's looking at taking advantage of this space, what can I do? Okay, do you think we can have something for this guest? This is my bold request that I'm requesting. Okay, and they are here. What do you guys think about that request? All right, because
For sure. I'm always happy to help. Wow. Crypto, there's a lot of opportunity there. That's Let me leave it at that.
okay, good. So we're going to have conversation in the background to see, but so you guys know, I'm truly interested in doing everything that is going to help you guys grow while you are, because this is me. I love you guys to invest in anything that has an opportunity to bring a potential while you're learning a skill that is powerful to grow those potential. Okay, so those are the things we're going to be doing in the course of the year. So I'm going to have conversation in the background. And as long as you are on the Telegram group or any of the connected groups, we're going to give you details as to when we're going to have the session. But there is something that would inspire me. This knowledge give me, every one of you. How many of you are ready for that call? If you're ready, put ready. You are interested in that call, put ready. This is my way to get you to know if you're ready for that call. Okay. So I told you guys when we started in the morning of this call that it is what you do with the knowledge that comes with you that matters. See, gratitude is an amplifier. You guys, some of you were on the last call and you are now on this call, but I don't know you. I've never seen any conversation of, oh, something happened. Oh, you pour water in my throat. That water cleared my throat. Oh, I really appreciate you for clearing my throat. Oh, my ear was blocked, and that word you said just opened my ear. Some of you got value, but you never shared, and you wonder why you forgot, why it was not a blessing to you. It's because you did not appreciate it. So aside application, so these are two things I would tell you to do. There are more, but appreciate and apply. These are two things that will change your result. Appreciate value. When you appreciate value, it makes it more powerful to you. It makes it more important to you. Then you can apply what you appreciated. So I need you guys, even if it's a text, even tell us. Time may not permit you guys to say what you've gotten on this call, but if it's to watch the video, okay, over the course between now and Wednesday, tell us what changed about you, what you learned, okay? Post it in the groups, any of the groups, copy it. It's a gift. We can put it out there that out of this thing we're doing, someone is getting blessed. So we could use it as a reference point. When that person probably grow an account and hit $100,000, we can say it's a reference point. It could be our proof of reference point. Yeah, this is a blessing from this type of training. So are you guys going to do that? So do that, and we're going to let you guys know when we will have that call. And if you're here, you're not following Engineer Chijoke, is on LinkedIn. There are several contents that is dropping on LinkedIn. I think you did follow his, find several useful content that will get you hungry and set you right in this space. Okay. So with that being said, we're super grateful for everyone that joined this call, but mostly we're more grateful for Mr. Chijoke for sharing this abundant, powerful blessing to us in this Mother's Day edition in the beautiful month of March, first quarter of the year. And we know that the rest of this year, everything about our trading journey, trading application, there's going to be a hunger to apply all of these results that you shared with us. Thank you very much. I appreciate, thanks for showing up tonight. And I appreciate each and every one of you. Okay. Thank you for showing up. But most importantly, I'll see you guys winning, with this information. Have a beautiful night and God bless you all.